Welcome to Letham Trading. Now we are going to see Nifty end of the day analysis of 28th December and the trade setup for tomorrow. See what we discussed in yesterday's video. Please go and watch in yesterday's video that we have clearly mentioned if the market is in between this range, the market will be two sideways. If the market opens around this or this range, the market will definitely be sideways only. This is what we discussed. And again, one more point what we discussed is if the market opens inside the CPR, we'll wait for the confirmation whether the market is going to break to the upside or to the downside. If the market is breaking to the downside, then at retracement we'll go for the put position. If the market breaks to the upside, after breaking, we'll definitely go for the call side. Most probably on call side, retest is not possible all the time. But in put side, since L3 is very near to it, most of the time it will again go for the retest and it will break this L4. This is what happens if the market opens inside the CPR. Okay. See the first 5 minutes candle. The first 5 minutes candle is an indecisive candle. Almost the first 3 candles are indecisive candles. After the 3 candles, see, I'll show you clearly. Here, the first 5 minutes candle and the second 5 minutes candle, they are trying to break the top CPR, but they are not clearly breaking the CPR. And observe the third candle. This candle will indicate you like going for a put position. These are the candles where most of the traders will get trapped. See, without our strategy, if you go for a put position, you will definitely hit your stop loss, right? So just by seeing this rejection candle, that is a rejection from top CPR and the 20 EMA, most of the people will take a put position and see how the market reacted. Moreover, the market was not too good to take trade today. Even if you take a trade here at this point, you will not hit stop loss, but you will not hit your target too. See, what is our target? Our target is to take at H3, but it went up to this point, and also this is at 2 o'clock. So if you take a trade here at this point at 11 o'clock, you will exit at 2 o'clock. Also, it is not giving you a good, if you are taking an option, see, most of the time you have to be like, today is Wednesday, most of the time Wednesday will be a sideways day. Also, there is a wide CPR, and if the market is near to the CPR, then the market will try to be sideways only. Remember, when the market is wide on Wednesday, and if the graph is near to the CPR, it will try to be sideways to the most of the time. So avoiding trade is the best choice today, but according to our strategy, it has clearly broken to the upside, right? So you can go for the call position, but it's up to you to exit where. If you waited for this whole time, see, you have to manage when you have to take call that is futures or options. See, if you are we always discuss that if we are going for a call position, it is better to take a future than options, because the market will not be good momentum. If the market is falling, then options will give you a good risk reward ratio. But when the market is going to the upside, you have to take futures than option. Okay, there is only one trade setup. These are the days you have to protect your capital. Most of the traders will feel like, see, it broke into the upside, taking call, it again went to the inside the CPR, taking put position. This is not the way you have to trade. You have to manage your rules so that you will protect your capital when the market is not according to your setup. So mostly not taking a trade is a good idea. Moreover, if you have taken a trade, don't worry about it. If you exited just by rejections at the previous day high is also advisable, but we always wait for our target, that is 1:2. Here 1:1 is possible at its previous day high, but we always aim for the 1:2 ratio. So also remember, if you enter here at this point, where will be your stop loss? Below the central CPR. So that's the target is less than the stop loss. So most probably not taking a trade is a good idea today. And we will move on to the next day. Since the market was too sideways today, tomorrow the market given a narrow CPR. See, in narrow CPR, the market should open between L3 to L4 or H3 to H4. That so that the market will give you a good momentum. But if the market opens again at L3 or H3, then the market will be sideways only tomorrow too. See, the market, yesterday we are very sure that the market is going to be sideways, but we can't decide is tomorrow about the markets to be sideways or trend, because the opening location will decide everything. If it breaks to the L4, then we can go for the put position. If it breaks to the H4, if it is in the first 5 minutes candle itself, then you can definitely go for the call position. But if it is not, it's just trying to break, but it is not breaking for few more minutes, then you should definitely don't go for a call position. I will advise you, if it is coming near H3 and if it is forming a confirmation candle, then you can go for the call position. Otherwise, avoid trading in call position. Moreover, the price action here is very, very important. You should correlate with the bank Nifty clearly and see whether it is getting rejected from H4. Still at H4, if it is getting rejected, you have to get a clear confirmation from bank Nifty and IT sector to take a put position. Otherwise, the market may retest at H3 and can go for from H3. But if it breaks in the morning itself, as possible, the market may turn to be bearish. If the market opens, there are more number of scenarios. It all depends on the market's opening. See, if the market opens again flat, and if it comes to H4, then it will definitely advisable. Short, if market opens here, you can take a put position at H4 if the market goes to the H4 in the first one go itself. Moreover, it all depends on the market's opening location. Thank you. I hope this video will help you. Please subscribe to our channel.